Okay, for this video, we are now going to cover Schedule H for the Form 5471. So Schedule H is the current earnings and profits reconciliation for the CFC. So what is this schedule designed to do? Well, Schedule H kind of works like a book to tax reconciliation, right? So for those of you familiar with preparing corporate returns, partnership returns, we have those so-called M1 adjustments. So those M1 adjustments are the book to tax adjustments. And that's kind of like what's going on here. All right, so a corporation needs to report its current year net income or loss per books, right? So that's line 1. But then under the regulations, there are certain additions or subtractions you need to make. So again, M1 adjustments, book to tax adjustments, to get to an adjusted current E&P for the corporation. So who needs to fill out Schedule H? If we go back to our slide here, so the required information table, again, this is in the Form 5471 instructions, we can see here a separate Schedule H. This schedule is required for Category 4 and Category 5A filers. So you remember John here, our U.S. person, he's basically all of these, right? So he's definitely a Cat 4 and Cat 5A filer, and so that's why we're completing Schedule H. So Schedule H, in order to start this form, you complete the information at the top. So John Q. Taxpayer, he's the person filing this form, his Social Security number, we have the name of the foreign corporation, and then the reference ID, right? So the reference ID, again, this should be the same as page 1 of the 5471. So when you're completing lines 1 through 5C, as it notes here, you should use the functional currency, right? So this company is just using US dollars as its functional currency, so we don't have to do any kind of translation adjustments up here. But if you were, completing this in British pounds or euros or whatever it might be, make sure that you're entering lines 1 through 5C using the functional currency. And then any kind of translation adjustments using the average exchange rate are done here at the bottom. Okay, so if we go back to our financial statements here, we have our balance sheet here on the right, the profit and loss on the left. We can see here our net income or loss per books is $23,676. So when we look at our Schedule H, that's our starting point, right? So $23,676. And then any kind of additions or subtractions are made here. Now, because we're trying to make a very simple example here, we don't have any adjustments to E&P. Some examples of where you might have adjustments are depreciation, right? So if you have depreciation for books that is consistent with the rules in a foreign country, but it's different than what is permitted under U.S. tax rules, you might have an addition or subtraction for the variance in depreciation. So this is very similar to using U.S. GAAP for depreciation rules in the U.S., but then you have a depreciation M1 adjustment for maybe a Section 179 expense or bonus depreciation. So you might have a variance there. Again, in our example here, very, very straightforward. So we don't have any M1 adjustments, right? So if we look at the profit and loss here, we have wages, some accounting expenses, licensing, legal fees, office supplies. So nothing too obscure that would require any kind of adjustment when arriving at E&P. So again, so we use the starting point here, line 1, that's our book net income or loss. That should be in the functional currency. Again, here we're just using US dollars. And then if you have any adjustments, you put the gross amounts in the net additions or subtractions column. So in other words, you use the absolute value. So there shouldn't be any negative numbers in here. If you have a subtraction, enter the absolute value amount, and then it's subtracted from line 1, right? Okay. So after that's completed, we get down here to line 5C. So 5C is the adjusted E&P here, and then you have to categorize it based on the type of activity. In our case here, because this is a investment company that's just trading, earning portfolio income, we have passive category income. So if you're a corporation, you need to fill out Form 1118 for foreign tax credit information. If you're an individual, you're filling out Form 1116. And if you look at those forms, you'll note that they require you to break out what's general category income versus passive category income. So passive category income in this context includes portfolio income, so the interest, dividends, rents, royalties, sale of capital assets, for capital gains or losses. And it also includes income that's passing through to the corporation where the corporation is not an active participant. So passive category income, right? General category income would generally be, if the corporation is conducting an active trade or business and they're not earning portfolio income, okay? Now, at the bottom here, 5D, we have the current EMP translated to US dollars, and then on line E, we have the exchange rate used. Now, remember, in this context, our EMP is just computed using US dollars because that's our functional currency. So I've entered 1.000 as the exchange rate because we are just using US dollars, right? So nothing too complex here. So we have $23,676 as the EMP. And the reason why this schedule is so important, particularly in the Subpart F income context, is because remember, when we talk about Subpart F income, Subpart F income is limited to the EMP that you earn in the company. So in other words, what we'll see on the later schedules is that our Subpart F income is much higher than our EMP, but the EMP inclusion is limited, the Subpart F income inclusion is limited to current earnings and profits. Okay, so that covers it for this video. Now we will move on to the next schedule.